It just reminds me of old market maxim, which is markets always climb wall of worries.
Yeah, I mean, actually, it's given that nothing new has really come out of Europe. I mean, obviously, Mario Draghi's talked about buying bonds, but there's been no real detail on that. Markets have continued to move ahead. So either something very big is coming from Europe, which would be great news. Plus, obviously, we had yesterday the finance minister, trying to chalk out some of the things he would like to do, which we all know he should be doing, or someone needs to do. So if you have a combination of these two coming through, then I think markets will head up to that 5,700 level, which we were thinking in August anyway. The dilemma I'm having is that everyone's long on words and short on action. So the longer we leave this to the end of August, then the more markets could return in September with quite a fall. So I think the next few weeks, or towards the 20th onwards of August, are going to be crucial really for the market to get the direction it needs. At the moment, markets are telling you that there's going to be something good coming, but we've been disappointed before. So at the moment, riding with the momentum, going higher, and I think that's where we'll be for the time being.
Long on words, short on actions, Andrew, reminds me of the finance minister's speech yesterday. What did you take away from it? And does it seem like anything material is going to change or come about in terms of reforms this time?
Well, his track record previously wasn't so great. When he was finance minister. So hopefully, he's having not been in that role for some time, has been able to take a kind of a wider view, and will come in and change things. But I mean, we've been talking about all the things that needs to be done for since the last budget, and nothing really has happened. And all that happens is we go through power cuts, or we go through the next kind of problem, and then there's another committee formed. And markets are okay, and we'll live with it at the moment because we're in a risk on trade, which you mentioned. But you take that risk trade off, and no one will have the patience, and everyone again will vote with their feet, and markets will come down. But that's not just for India. I think that's globally as well, particularly in Europe, where we're all waiting for some real action to happen. I think the markets will give it another few more weeks, possibly, before starting to test the resolve of politicians again.
I love your analogy though. Long on words, short on action. Andrew, so what exactly are you communicating to your clients? Are you telling your clients that, look, this is a risk-on rally, it's time to cash out?
No, I don't think we're saying that. I think we're saying that we're going to have a good rally, given the expectations I have from both the European Union and some action on the policy front here. I do believe they'll make some efforts to do something. And there's some low-hanging fruit they could do, say in insurance or pensions, which they could try and push through, and hopefully on the kind of tax angle. I think we're all thinking now GAR's really just not going to happen for some time, so I think that's given a sigh of relief for foreign investors. I think really what we need to see is Europe come and deliver something which is meaningful, which we can start to say, okay, we know it's still got problems, but we can see the steps that it needs to take, and it is taking, which will help recovery in 2013, 2014 onwards. That's all the market's after. All we're getting at the moment is we go from Spain saying they don't need a bailout to now needing a bailout. And if you take the Italian Prime Minister, he said he didn't need a bailout, and a few weeks back he says, never say never. And markets don't like that. So let's have everything on the table. Let's have a roadmap, and I think that's what will propel markets globally. A lot of money is in the bond market, and that could easily shift back to equities. Given that we haven't really seen equity markets move for some time now over the last 2 years in terms of performance.
Andrew, have you heard anything fundamental, positive development on Reliance Industries? What would explain the move that we saw in the stock yesterday?
Well, I think it's been you know, a laggard for so long now. You know, it's been a huge favourite of mine, and I've just been disappointed. There's reports, obviously, that they would allow the government to look at their, you know, their books and so forth. But I don't see that why that should have such a big rally. I can only presume that you know, the game of Reliance looking for higher gas prices, you know, with a new finance minister, or the old finance minister, and Manmohan Singh might be more supportive of Reliance efforts, and that would be, you know, where you would see a gas price hike for them, and that would be just a huge earnings kicker for them, and that's what the expectation would be. Would I chase it at this level? Probably not. I'd wait and see what really comes out, because I think it's going to be a little bit more drawn out than people are expecting. But there again, you know, given the problems in the power sector, the government needs to start clarifying what they're trying to do. And you know, I still go back to the fact that I can't believe that, you know, British Petroleum pays so much money for, you know, dud assets in Reliance. So there's a game being played, and maybe that game's being played out a little bit more quickly than people were expecting.
Andrew, at 3,300 Asian Paints was priced to perfection, at 500 HDFC Bank was expensive, and at 400 HUL was one of the most expensive FMCG stock. But those who bought these stocks, they have made money this year.
Yeah, I mean, you know, HDFC is just a quality bank. I mean, you stick with it through. It will deliver, you know, strong earnings for you year after year. And you know, it's just a great play on the Indian economy. And you know, whilst it's the Indian economy is slowing, that's not just necessarily just the housing market. So you know, there's still, you know, lots of people there who want housing. So I think it's just a quality buy. Hindustan Unilever, and you know my views on the consumer stocks, is that, you know, unless you think India's demographics can change, which they can't, then people will have more money, will spend more money, and this will be great for consumer stocks. So valuations will always look high. You know, my concern would be obviously the monsoons or the drought, or whatever you want to call it, could have some impact on their margins going forward. So there will be a call where you move out of these more for performance going forward, but you know, as a core portfolio, you still want to hold them.
Andrew, what have you made of Tata Motors? Does it seem like, looking at the way the stock price is moving, that there is still value in the stock, it continues to be a buy on dips, and the negatives in terms of a slowdown on JLR volumes is something that the market is beginning to price in?
Yeah, you know, it's difficult, because what you're asking me to predict is their volumes in China every month, and that's really what you're seeing in terms of the share price performance. My guess would be is that, you know, if I look over the year period, the share price is down, and that's telling you something. So I think they've still got problems. Yes, you'll get spikes when their volumes pick up in China, and that's good news for them. But I don't, you know, there's something I'm missing here, and it's on the negative side rather than the positive side. So I think I'd probably be more of a seller of Tata Motors at these levels than I would be a buyer. I wouldn't chase, you know, month-over-month figures. It just doesn't work. You're going to have a longer-term trend, and China's slowing. We all know that, and I think their volumes will be hurt because of that. So month-over-month, you might get blips up, which will help the share price, but I'd be a seller into that. I'm not convinced of Tata Motors at the moment.
What about valuations for Tata Motors, Andrew? Indeed, it is one of the cheapest auto stock, and if I look at FY 13 estimates, it's trading at something like 5.5 to 6 times based on consensus.
Yeah, well, that's obviously based on the fact that, you know, the earnings being put out by analysts are correct, and you know, maybe they need to put some of the red ink to their forecasts, because I think that, you know, we're going to be surprised on the downside. You know, the valuations tell you a lot. Why should it be on such a low multiple when, you know, it's a quality company, you know, with quality products? So there's something not right at the moment. I'm not sure what it is. I can't pinpoint it, but there's something that's not right at Tata Motors at the moment.
What are your absolute return multi-bagger ideas at these levels? And I'm using the phrase multi-bagger on purpose because I genuinely want to get some multi-bagger ideas from you.
Okay, so you know, there's always many of them, but I'll pick out one. You know, we've consistently said we've looked down at the IT sector, and the one that we're focusing in on is Satyam. You know, we think the merger with Tech Mahindra, it just, you know, moves it up, you know, into a different scale. They had great results, and you know, we think the valuations are too much of a discount to some of the larger ones, and you'll see a big re-rating once that merger goes through. So that would be one which you know, we have been buying and we continue to like.
Okay, Andrew, good to have you on the show as always, and in the